Hi everyone, so another live update for today, double trouble. So some interesting news coming up that the US yield curve has just inverted. So just to explain that, in terms of government bonds, normally what you'd expect is to pay higher interest rates for a longer period of time because it's more things can happen over a longer period of time, so it's riskier. But what's happened is that now the yield on 10-year government bonds is less than the yield on 2-year government bonds. So that's normally a pretty reliable indication of a recession. So potentially the US going into recession. So I wanted just to pull up the dollar-yen pair here. If the US is going into a recession, necessarily speaking, that would be bad for the US dollar. And specifically talking about dollar-yen, you know, the underlying drivers of a forex pair like this is how the relative interest rates are and the expectations over these interest rates. If we're seeing interest rates plummet in the US more so than interest rates are dropping in Japan, which you might expect at the moment if you're expecting a US recession and the Federal Reserve to cut interest rates a lot in preparation or in reaction to that recession, whereas in Japan interest rates are already at zero and they're already engaged in quantitative easing. It's debatable how much more the Bank of Japan can actually do. So on a relative basis, the Fed might be able to push interest rates lower in the US more than Japan can do. So that would lead to a weak situation for the dollar-yen, and potentially what we're looking at here, as you can see, is we had a failure to break above 115 on multiple occasions on dollar-yen. This is a weekly candlestick chart. We had a series of higher lows here, and we seem to have failed to hold this trend line, and then we've made a lower low as of last week. So then if we pull up to the daily candlestick chart, you can see the sharp reversal where the market seems to be reacting to this broken rising trend line. The peak was around 109. We obviously failed to get back up to 110, the big round number. And at the moment, we've just bounced quite heavily off 105. The bounce was because of this cease in the trade war. But I think the talk about a recession and the inverted yield curve probably plays a bigger role. And if it does, then we see the downtrend in dollar-yen continue. So we're basically looking to see how dollar-yen reacts to the 107 level, which has failed to get back. Here was the support. It broke below, tested. It's come down to 105. It's retesting it now. If we get a move back above 107, for the time being, we look okay. We could get a move back up to these highs. But if we can't hold above 107 for today, it looks like the currency pair could be about to roll over. And if we pull ourselves out to this weekly chart again, having taken out this low at 105, naturally you would expect the market to come and take out these previous lows down here at the 100 handle. So we potentially here, because of this inverted yield curve and recession fears in the US, dollar-yen could be heading down to 100. But let's see how this 107 holds for the time being. All right, thank you everyone. Jasper signing up.